Good morning and welcome to the Trading Lounge and the Day Ahead Report. And here we're looking at the S&P 500 on a weekly chart, and really just simply to point out the obvious here. The 1500 is the old high territory, so we can expect some resistance at that point there. So so obviously that's going to affect all global indices as well. So this is, as I mentioned, a weekly chart. Also within the weekly chart as well, just wanted to point out that the old September highs here as well. The S&P 500 is that's 1474 here on the cash market. So we're quite close to that at the moment. The S&P 500 is kind of leading the way up through here in terms of the highs here. So when you have a look at the other markets, the S&P 500 here, as you can see, is quite close to the top here. The Dow Jones weekly is less here, and then we've got the Nasdaq here, which is the least here. So if there was a turn to the downside, then we want to be looking at this for the shorting on the downside. So of course Apple and so forth are quite weak at the moment as well. So I just thought that I'd point that out. The other interesting sort of aspect, I guess, as well is the European markets. The European markets have made highs above this previous September high there. If we go and have a look at the FTSE for instance, we can see that go to the FTSE 100. We can see that it's just sort of pointing out here that it has taken out the old highs here quite significantly. So, and also these here. So that's kind of a nice lead in really for what we're looking at, and that's kind of what we're sort of expecting with the US markets continued to the upside. The S&P 500 facing its old highs at the 1472 sort of area there would possibly see the Dow Jones sort of head back towards the 13,000 in that case. So on the Dow Jones here is a bit of an alternative count here. The 13,000 is obviously through here. But if the S&P 500 is facing its current highs at the moment and has trouble there, well then the Dow Jones at the 13,500 would be seeing a move back down as well, but only as a corrective pattern at this stage. So just looking at that intraday, let's just have a look here for the Dow Jones here. So this is the 13,500, and for traders that understand the levels, you just know that there's going to be some type of corrective pattern here. Now, the short-term good news with this is that this here does appear to be a corrective pattern, so that means that we can see another new high here. Now, the Fed's Ben Bernanke is speaking after the market closed today, so that obviously will have some impact on this. And tonight we've got some retail figures coming out of the US as well, so that's also going to impact on that as well. But the bottom line is that the Dow Jones is not going to go very far from here. We can get another little high up through here, and then a corrective pattern through here. So one way or another, we're going to see the corrective pattern in this sort of area here. So it's not going to run that far, and that's pretty much the same with the S&P 500 as well. We've got the 1500 up here. If the market drops out of this subgroup 2 area here, the 65, 72 and the 80, if it drops out of that and finds the 65 as resistance, then we can see that this is going to be heading lower to cover these gap down here. If support is found on the 1472, retested support, it's not enough just for it to go above it like this. It needs to retest it and then start to make a new high above the previous high. So if that's the case, well, then you can go long, glean a small position on the 72 22 and then on the 80, and we'll see you move up to the 1500 here, and then a larger correction up there. And our local market's doing much the same at the 4700 here. In fact, we've been correcting now for about 7 days. CBA and BHP have been catalysts in that. However, we do see this as a corrective pattern within here. Now, this move down through here is in 3 waves, so that's why we know it's corrective, but we can still have an A and a B and a C wave down into here as such. So the 40, if it did come down, the 4650 would be the same distance that it had above there as well, and the 4650 65 number in here would offer good support here, and there is some volume support over here for the 65 number as well. So, but the bottom line is that this is in a correction and it's still correcting, and that's that. Now, this is 3-wave correction here, so we can make a new high above that, and if that was going to be the case, then as mentioned yesterday, we'd be looking for support on the 4720 as the first inkling of strength in the market, but that has to be tested support as well. It's not enough for it to trade above. The breakout's important, but the retest is more important. So none of these retests have actually panned out, and it's also the 4730 as well. As you know, the group 1 here, the 10, 20 and 30, if support is found on top of the 4730, then we can be guaranteed to get to, well, not guaranteed, but pretty high to get to the midpoint, the 4750 at that stage. But what it also does now is that once we've got a correction here and finding support on top of group 1, it separates the market psychologically from thinking about the 4700, and they start to think of the high numbers up there. And the first one is the 50 from there, but would need support on that midpoint to get higher up there. But the 20 and the 30 are the steps to the upside, and that's how you go. But otherwise, we should consider a 5-wave structure to the downside from this high here. So a larger A, B and a C wave down through to here. But there obviously is good support at the 4700, so I'm aware of that. And we need to trade what we see as well. So that's why I mentioned that support on the 4720 would glean the first small position with the view of adding at 4730 if that became the support there. Alrighty, let's have a look at the commodities as they as well. The copper is weaker at this stage. Okay, just looking at the copper price here for the London market. This particular pattern that we're seeing here is a triangle pattern, and quite easy to see that. And as I mentioned yesterday, that triangles in Elliott terms are 5-wave structures, and they're in the 5 waves. They're counted as an A and a B and a C and a D and an E wave through here. And once that's completed, then we'll see further downside, another move down like this here. So just wanted to sort of just go back over that again. So once we see the, or if we see the price move under the trading level 8 here as resistance here, then we know we've got a bigger picture coming to the downside. But while it's above the 8 here, then we can consider it as a positive market, but as resistance next time round, then we need to look at it as a negative market. And of course, this is going to affect the Australian dollar. It's going to affect BHP, all these markets. So that's something to look out for. And this is it here on the US market. We follow the US market because it's the last closing price. But once again, you can see that triangle pattern working through here as well. And in this particular case, we were looking at group 2 here, the 65, 72 and the 80. And we can see that it's dropped out, just slightly dropped out of the 65 here, 365. If this 365 becomes a tested resistance, then we'll see this market move back down to retest the 350 there. On the other hand, if it's going to be a stronger market, then we'll see it move back up onto the 372. So the Elliott wave is helpful, and the price here sort of dictates the shorter term sort of strength and weakness of the market, and also helps with the trading as well. So now that it's jumped out of subgroup 2 there, we know that it's weak. If we find that as resistance, then we know that it's doubly weak as well there. We also know BHP as well. BHP is up at the 80 here. Now it's had the arrival and it's had the reaction, so it still can push up here to have the first high above the level here, and then it can have its correction here and fail at the 80 and roll over from that stage. Now we do know that from this, this is a weekly chart too, by the way, so it's quite a big picture. So we know that we've got a 5-wave structure down through here. So we were looking at this as a corrective rally through here, and the norm would be the 50-60% retracement level from these areas here. So we're kind of in that at the 80 here, even though it can push a little bit higher through here, but these old highs would come in to play here as well. So once again, we know that this is not going to go very far here, and local BHP is at 38, so same story there as well. So that needs to be considered. Now we can see these markets push up as we see the US dollar actually move to the downside through here. Okay, so the US dollar, as it's been moving down here, we expect it to have a bit of a rally, a retest. It may not go as high as the as the 80, but it would be seen as a retest of the 80. So while this is pushing up through here, we'll be seeing the commodities move to the downside. Once the US dollar starts to come down through here, then we can see the commodities rally to the upside. So it's good to keep an eye on this. We'll talk a bit more about this when we get to the currencies. The oil market here, as mentioned yesterday, we've got this, on daily chart, we've got this huge triangle through here. One of the main points here, of course, is the 95 as the resistance. It's the midpoint through here, and we can see this triangle well, we know it's a triangle, that's okay. What we're not sure about is the possible E wave. The E wave can be finished at this point here, where we've got the triangles I mentioned before, the A, the B, the C, the D, and the E. It's basically diminishing into a particular price point, and each retracement level is 50 to 60% of the previous wave. So we've got this wave down through here, so it's quite a high retracement level here, back down through to here in that relationship, and then this one back up into here. So the 95, 5 second strongest number, it can fail from here. So if it does find support on top of the 5, then we know that it's strong, and then that E wave there would be in place here. But if it fails here, and there's also this trend line resistance coming through here, so there's kind of a lot here to to stop this moving down through here, up through here. So we can see this market move back down through here, but also we can expect it to come back as well, in terms that this move up through here hasn't been corrected yet, and also oil follows stock as well. So if we're going to see the S&P 500 struggle at the highs, which we are expecting it to do, then oil's going to follow in suit there as well. So if we look at that on the smaller picture here, it's possible to count the 5 waves up through here in this particular case here. But this little move down in through here, it does appear to be in 3 waves. So that makes the rest of this a corrective pattern in terms of an A and a B and a C. So, as for me, also using the levels as well, is that this is group 1 here, minor group 1 in this case, the 1, 2, and 3 here. And if support is found on top of minor group 1, well, then we can expect higher prices as well. So we'll continue to stay with the higher ground, because we need to stay with what we're looking at. But if the 92 here becomes the retested resistance, then we can expect a larger correction in first stages across the 90 here at minimum leg here. So let's just see, while it's above 92, then it appears that the trend here is still intact. We know that you can see the trend here is quite strong here, and then the movements up are getting less and less, and you can see the market basically creeping here. So, it's creeping sort of higher. So there's obviously, selling pressure coming in on through here. So there is weakness there. We just need to allow this correction here to unfold until we can, confirm it in a more positive light through there. But following stock and the Dow Jones at 13,500, we can expect this to be doing much the same thing here. The gold market, silver's much the same as well. In fact, silver's a little bit higher off its lows here, leading the way a little bit. But here we're looking at this. This is a corrective pattern down through here. We've got a nice A wave, a nice B wave, and a C wave here in 5 waves as well. I understand that that this can also be counted as down for 1 and back for 2 here and down for a 3rd wave here. But the personality of the structure that's coming down here is not giving us a 3rd wave sort of price action. It's because normally if it's a 3rd wave, it would be much sharper than the 1st wave coming down through here, and that's really not the case. They're pretty similar as they're coming down through here. Normally in a correction, the A wave is sharper and the C wave here is more lazy on more of an angle, but they're quite sort of similar. But so we're looking at this as being an A and a B and a C wave down to here, and in the C wave we've got our 5 wave structure through here. So we do need to see it push up from here, and that's what we're looking at the moment here. So just sort of getting into the 4-hour chart here a little bit. This move up through here, yes, it can be counted as corrective in terms of an A wave, little A, B, and C here for the B wave, and the C wave for here. So that could certainly be a top there, rally high, and we could see further downside here. So what we'd be looking at here, using good old Group 2 again, a 72, if we can find support on 1672, well then that would be the second piece of hope to the upside. The first bit, of course, is just the fact of being in Group 2, the 65, the 72, and the 80, if it drops out through here. This also, the other positive thing here is that this little structure to the upside here, well, I've got that on a smaller chart here, yeah, a little bit here. It does appear that we've got a little impulse wave up here off the medium level here, 1650. So that does appear to be a positive attribute, but as 5 waves up, we need to get a 3-wave correction. So it's not sort of fully developed here, but once again, that line in the sand would be the 1670 or 1672 in there. So so use that. But also take in consideration the Fed's speech after the US markets close as well, because we may see spikes in the market and things can change somewhat. But silver's in much the same boat as well. Just on a weekly chart here, in this case, we're looking at this being up for wave 1 and A, B, C back for wave 2 here. But that low here has to stay in place here, okay? So that's the main sort of gist of it all here. And if we move in there a little bit closer to the situation, I think would have mentioned yesterday, support on top of subgroup 1 here would be the catalyst to the upside. So basically silver's moved up higher than gold above its previous high here. So we can, hopefully sort of see this as a pathway for gold as well. With the silver here, we can see we've got a little 5-wave structure up through here, so we have to expect a little ABC correction across the 31 here. Once that's completed and you've got support there, the idea would be to scale in through subgroup 1 here, the 10, 20 and 30 there. If support is found on top of 30 and subgroup 1, well then you can move up to the 50 and build a trade to the upside. But as mentioned with gold, is that this can be counted as a corrective wave, as an impulse wave as well to the upside. So not a lot of confidence, with a strong bias to the to it being an impulse wave, but because silver's led the way up, that's the hopeful thing. And yeah, so we'll stay with that. So let's have a look at Forex. Okay, the US dollar here. We can see this trend that's come down through here very quickly through here, and then it's starting to slow down through here. This is the midpoint here, the 79.50. So even in this little section here, we can see a little 5-wave price action through here. The current move up through here is in 3 waves, a little A, B, and C here. It may only be part of the correction in terms of a larger A, B, and C wave up through here, but once it's complete, it normally retest the channel line through here, or I see it as a retest of the 80. But either way, once depending on how weak it is and what happens with the Fed speech after the markets through here, then obviously the trend is down. It's just looking at this rally to the upside here. If this is going to be a little, if this is completed here as an A, B, and a C through here, which is quite possible, and then further downside through here. So the 79.50 as a retested resistance would see a new low come in at the 79.30 through here, which would see the opposite for the euro pushing up to 134 here. So this is just a 2-minute chart here, but what I wanted to point out here is that the 134 over here before, we've seen this one move down here, so that's a corrective move down, then a corrective move up through here, and then a corrective move down. So that's basically an ABC here. So we've got a 3-wave swing, so an A, a B wave, and a C wave down through to here. So we can see new highs, and new highs would be taken on the proviso that sure, you can work it at the midpoint, but I like to work group 2 here better once that's got support here. So you can see that it's at subgroup 2 level here, we've got 65, 72, and 80, and we can see the market come into the 65 area here, but not find support. The breakout's important, but the retest is more important. Breakout's important, retest is more important. But we can see that this is a corrective pattern through here because it's got overlapping wave structures, so you know that it's going to be pushing up from that point there. But you can kind of see it grab support here as such, and we can see this testing support here, and we'll see the same here as well. So we can expect new highs up at the 34 for this market as well. Let's have a look at the Australian market as well. So the Australian market, this wave count up from, if I've got a bigger picture here, let's have a little look here. I mean, it's still expecting a larger correction across the 105 basically. I'll just see what we've got here. This is a bit bigger of a picture here. So this move up through here, it counts as it can be counted as an impulse wave to the upside in terms of some sort of 1 and 2 and 3 and 4 and 5 up through here. But it counts better as a corrective wave up. But also just see if I can get a bigger picture here as well. Oh, we might as well start from here then. So it's a daily chart here, and once again we're tracking a triangle pattern, a bit like oil as well, and the triangle top of the 3rd wave here. So we've got this whole movement up through here, and we've got the A wave, an ABC for the B wave, the C wave, the D wave, and we were looking for the E wave through to here. But we expected the E wave to come down further through here, but that hasn't been the case. So we've got to run with what we sort of see here, but it does work as a from a D to an E here. It does work because it's got the A, the B, and the C correction here for the E of wave 4 here. So that's a triangle pattern, a 5-wave structure, the 1, 2, 3, 4, and 5 here. So this would be complete here as a wave 4 if the 105 develops a support. Now, it's tried to develop support through here before, but just couldn't quite do it. Will it do it this time? Probably, because this is a sideways pattern through here, and it's also corrective as well. So when I look at this moving up through here, I see this as a sideways corrective pattern. So this should see us further to the upside. But what we're looking for here is support on the 105 here, a nice tested support. So this current move up through here, yes, it can be counted as an impulse wave, but it also can be counted as a corrective rally through to the upside. And we do have that resistance through here as well, which is holding support. So it is a critical little area here. I would have just liked to seen a bit more support in this area through here as such. But there is a fair bit of accumulation process driving it as well. So it does have that positive sort of backing towards a higher price to the upside. But that's support on here, and we do have a bit of support here. I just would have liked to seen a little bit more, but we don't always get what we sort of want. But anyway, this if pretty much the old story, if support is found on the 105.72, then we can consider further upside from here, and we would trade long from it, because even though we're waiting for, like here would be looking for an A and a B and a C wave back in testing through here, that's fine, but and that would be the Elliott thing as well. But when it comes to trading, you need to trade what you see, and if there is a support in the market that challenges the supply level, because this is the supply one here and this is the second supply level through here. So if they're going to be challenged and support is found, well, then you have to go with that. So moving in there a little bit further here, we can see that this price here at the moment is pushing up, but it hasn't really found support here, so it's challenging that supply level there. So it can fail from here, from the 72, but if that does find support there, then you can build a small position, after the retest into 72, and then add the second position above on top of the 80 there to the upside there. So yeah. Also, too, the Australian dollar is a good catalyst for leading stocks, and especially the S&P 500 and so forth in the US. Just the way the cookie crumbles, as money coming into the Asian world through the Australian dollar, or safety in terms of sovereign protection in buying bonds. So yeah, so it is a good catalyst. So if this is not going to retest the 105 and is going to continue to move up from here, then we've got a positive market in play, and that would also make the ASX 200 on the 4700 a positive thing as well, because we know that the last 7 days has been a correction in the market, in our local market, and of course we're looking for the end of that, and I figured that we were 2/3 the way through that correction, but if it's going to push up from 4700, well then so be it, and we need to trade up from that point. So the 4730 on the ASX XJO CFD, then positive there. Alrighty, well that's it, and just be aware of the Fed speech at on market close. Alright, well, good morning and good luck.